Good morning, good afternoon, good evening, folks. Michael Zuber, one Ritzel at a time. It is Monday morning, and that means, yes, Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. How about you?
I'm doing great, man. So one of the things I wanted to do today is kind of merge a couple of questions to go together, and that is, what do you think of when you hear all these people talking about bubbles, biggest ever, crisis, crash, this, that, the other thing, and then you kind of come in and go, hey, lots of people are trying to get started now. And you kind of add on to that, can anyone get rich? That's a lot in that statement. Where do you want to go in there?
So let's put it in the context of the United States. So,
Sure.
there are places in the country and in the world, in countries in the world right now where, they are suppressed, and it's very difficult, if not impossible, for those individuals in certain areas right now. So
Fair.
let's just take the United States, the land of opportunity, where everybody has an equal opportunity that's willing to educate themselves and put in the work to become whatever it is their version of the American dream is, whether that's wealthy, rich, property. Absolutely, yes. In this country, everybody, anybody, and everybody can do it.
Awesome.
And we've got example after example, of that. So there's no doubt. The real question is, we are in, the greatest bubble, as Michael Burry says, the greatest bubble of all time in all things. And, he's been calling for crashes and stuff. But at the same time, he said, I've been through several bubbles in my life, and I am not shorting cryptocurrencies or certain things right now. And he's actually,
he closed his short on Tesla.
He closed his short on Tesla, and Elon Musk got the best out of that deal, I think.
Yeah,
he waited, and then he sold his stock afterwards.
Yeah, after he closed it. Yeah, exactly.
So Burry's missed that a little bit, but yeah, we're in a huge mega bubble. Jerome Powell was retained his position.
I saw that.
So obviously they realized you can't make a change there, because that would have brought it all tumbling down.
Yeah.
And as long as you got the Fed behind everything and Powell in there, with the mindset that's there right now, this is going to continue. You can't fight the Fed. It's a bull market. You don't short a bull market, in any asset class. Now, again, there's certain things that are keeping it up, and it is very difficult because this is the top. And I get that question all the time. Should I buy real estate at the top right now? Prices are at all-time highs. Well, rates are at all-time lows. So what are your goals? If you're looking purely speculation and appreciation, you have to be very in tune to what's going on in the market. If you're buying cash flow, if it cash flows, you can pay whatever you want. Doesn't matter.
Doesn't matter.
Cap rates don't matter. The only thing matters is dollars in, dollars out. Does it cash flow? After debt service, you need to have something
all in. Yeah. All in. No fake accounting here.
Yeah. You got to have some money left over. So you have reserves and CapEx and, things like that. When it comes to stocks and things like that, the question is there significant upside for here if you're getting into stocks and, cryptos and other financial assets and commodities, bonds, things like that. We're at record highs in a lot of these areas as well. So you have to be careful there, because, we've seen straight up in all markets here since, really forever, since existence, but they all have their peaks and valleys and good times and bad times and bull markets and bear markets, and that none of them ever last. They always go up, they always come down, they go up. The question is there significant upside from here like we've seen over the last 10 years? And at some point, you would think, and I don't know, I mean, this is above my pay grade, and I think some of the brightest minds in the world, economists, financial analysts, investors, billionaires, nobody knows how long we can continue on this path of quantitative easing and, close to zero and almost negative interest rates. Nobody seems to know. Does that ever have to stop? And as long as that doesn't stop, yes, we can still grow exponentially. And, people are, we're setting records and, all of the financial markets every day. We're setting records in crypto every day. But at some point, if that policy changes, it's going to delever, and it's all going to come, crumbling down back to levels, and then you'll be on the way up again. So you just have to understand what you're getting into, why prices are where they are, where the growth is going to come from, and how. And you need to understand the top. And I say it all the time. The most important thing to know is the top. The bottom doesn't matter. You need to understand where the top is. And is it short term or is it global macro? And those are the things you really need to be in tune with.
Yeah, there was something I heard the other day, the TINA trade. I'm like, what the hell is the TINA trade? It's there is no alternative, is the TINA trade. Basically saying bonds are negative, can't touch those. It's the money's got to go somewhere. So few people are comfortable sitting on cash right now. right? They've got to be fully invested. The retail traders fully invested. And then I go back to Warren Buffett, 149 billion sitting on the side, Jamie Dimon, $1 trillion in cash. There are some of the biggest, baddest investors out there that are like, nope, I'll be in cash. It's so uncomfortable.
They don't have to. So you got to understand where the narrative of the Tino trade is coming from. It's coming from the institutional world that has to provide a return. It's coming from pension funds, hedge funds, insurance funds, annuities. It's coming from those companies that have to generate a 7% yield in order to continue to make the payments out that they're making. So that's where that narrative's coming from. And it's risk on because you can't get yield anywhere else.
Oh, yeah.
And they're starting to look more, a lot of pension funds and stuff, they're having to look for more alternative assets like private equity, commercial paper, more riskier assets. Some of them are looking at crypto. None of them have made a big move. And if they do, it's going to be 1%. But if you're 500 billion, 1% is a pretty good little number for average people. But for that firm and fund, it's really not. So it's becoming a big problem worldwide for retirement funds, and for insurance funds and things like that have to earn yield. That's where that narrative's coming from. Your average investor, trader, public companies, they have to make returns. Buffett needs to make returns, but he doesn't care, man. I mean, he's almost done. He's going to be.
Is he 90 now? 89 something? I think.
Yeah. So I mean,
he's old.
His days are numbered, and so is Charlie Munger. But the firm needs to continue, and they have to generate a return for their investors. But they can just buy their own stock back and, things like that. So they, and they have to move big amounts of money. So it's very difficult for them, but
Warren Buffett's going whale hunting, as he calls it. It's pretty, a little $1 billion deal doesn't really help Warren Buffett. He's going for 10, 15, 20, $50 billion, like when he bought a railroad the last time. So the other thing is you brought up right out of the gate is if it cash flows, right? For me, one rental at a time, right? Residential guy. Today, if it cash flows, like real cash flow, not like some fake, after depreciation or whatever cash flow, but like real cash flow, positive yield, and you're getting cheap 30-year debt, that means something. There's value in the debt because at least I believe that rates are artificially low, pushed low by the Fed. I think they will be low through most, if not all, next year. But at some point, rates go up. And that will have an impact. But again, look at payments, look at rent, right? Do the math, folks, because sometimes the answer is, buy now, lock in debt and, hold it for 30 years.
Yeah. Rents have gone up exponentially in the last couple of years. That's one of the biggest inflation, indicators and impact out there that nobody is calculating at a federal level.
30%, it's 30% of CPI. And the last time the CPI number was hit, it showed 2.4% or something. I was like, what are you guys calculating? Rent's up 20%. What are you doing? So
they have I don't want to say they have no clue. I think they do know, but there's really nothing they can do about it. They're pinned. They can't do anything about it. So what do you do? Do you let inflation run wild? Because how punitive is that compared to a complete financial meltdown? Yeah. So right now, a little bit of extra inflation is less punitive than a complete financial meltdown, because if interest rates all of a sudden shoot up, everybody's debt goes up, everybody's credit cards go up, everything is just a catastrophe. And if, liquidity dries up out there and we have an event like we had 08, 09, which was you couldn't borrow money, interest rates were through the roof, that really puts an impact on housing. Housing is driving a big part of the economy right now through construction, things like that. Same thing in 08, 09, people underestimated the impact that a housing construction boom. Yeah. It's all assets now. It's commercial and residential construction boom everywhere. I mean, there's cranes in the air in cities all across the country. People underestimated in 08, 09 the impact that the construction industry had on the economy. And when that shut down, boom, it was lights out. It just reverberates around like a butterfly effect. And now the low interest rates are the construction and housing, and the bond purchase and monetary easing is the housing crisis that we had back then, the equivalent. There's that much liquidity and leverage in the system that if it stops, it all comes crumbling down. So what's worse, inflation or that?
Well, so let's actually have that conversation. So let's say for whatever reason, inflation really is 6.2%. We're just going to magically say it is. Do you think inflation goes higher from here? And if it does go higher, where do you think it peaks?
I don't know. I mean, 10% is a real ugly number if they're talking their numbers,
Yeah.
because you know that
Yeah.
means
If it is 10,
25.
it's like, yeah, exactly.
Yeah. So if they start talking 10%, I think you've got unprecedented inflation, but you receive pushback and people change their behavior. It's already starting
It's
to
already
happen. People
starting.
are already starting to change their behavior now because of gas prices. That's a big one.
Yeah.
Rent and housing, food, clothing, everywhere. Even like, my kids are noticing it. They're like, dang, clothes are like unbelievable, as they're looking for Christmas and things like that. They're commenting on how expensive things have gotten. So when kids are paying attention, you got a problem.
Yeah, it's funny. My wife the other day hasn't noticed a receipt number in a long time. We picked up food at a restaurant we've been going to for a decade. She looked at the bottom number and went, "What?" It was one of the
so that'll
funniest
fix
things to me.
itself. It's just like housing. We're already seeing pushback in a lot of markets. Prices are coming down. We're seeing days on market go up. Some of that's seasonal, but some of it's real that, buyer fatigue. People are tired of getting beat out of houses. People are tired of overpaying, those types of things. So we're seeing a little bit of a tip of the scales in the housing market in certain areas. We're seeing pushback in terms of people's, behavior. So what's the first thing that happens? Maybe they cut out eating out. Maybe they cut out going to the movies. Maybe they cut out a little bit of extra weekend travel because of gas prices and stuff. Or, they do those things and they cut out other bigger expenditures, and then taxes are going up, not only, income taxes, but property taxes because of the municipalities that have suffered during the pandemic and stuff. There's a lot of that. So, there's some serious stuff and some headwinds out there. But again, what's worse, that or, bringing the economy down. And I think, if we start, and that's the stagflation people are talking about, where you have high inflation and you have low growth because people stop spending because of the inflation.
Exactly. This has been a lot of fun. I appreciate it. I agree with you. Anybody, again, limiting to the United States, I do believe anybody can get rich. There is a process. I wrote a book called 15 Conversations with Real Estate Millionaires. You are one of the chapters. Chapter 8, chapter 9.
Let's qualify that. Anybody's a big contemplation. Everybody has the opportunity. Let's just put it that
everybody.
Pretty much everybody has the opportunity, but not anybody, because there are people that just whatever physical limitations, mental limitations,
you're right,
just isn't going to happen. But pretty much everybody who's capable, the opportunity's there.
Very cool. Well, Greg, how can people find you?
Yeah, gregdickerson.com. That's where all my information is. Website, YouTube, podcast, all that. gregdickerson.com.
Very cool, buddy. Thank you very much.